What's going on, you guys? So I wanted to make this video to explain my trading strategy. Over the last year, I've switched to swing trading rather than intraday trading, which is what I was doing before. And the only difference really is that I get to trade less, right? That's the goal. I want to be able to sit down on my computer, find a couple trades, and let them ride. I want to trade less and make more. So that's what I did. I figured out what's the best way to trade less and make more, and that was swing trading for me. And this has been working pretty well for about the last year now, and I just wanted to make this video to explain what I'm doing and why I like it so much. So I'm going to go over my entries, my exits, a trade that I've taken this week, so you guys can kind of see what this looks like real time. In a sense, it's Friday, so the market's closed. But you'll get to see how I found my entry on this trade and how I moved my stop loss and how I found my stop loss to begin with. So I guess let's just jump right into it. So we have the J system swing trading strategy. We have 3 entries, the J1, J2, J3. All my entries are found on the 4-hour and the daily time frame. And let's get into it. So in order to identify what I want is I first use moving averages. So this is SPX, the S&P 500, and what I do is I look for crosses in the moving averages. So for a little bit, I thought maybe I'm going to start looking for longs on SPX, right? We had the blue line, this is my 20 moving average, and the red line is my 50 moving average. And we had a cross back here for a long setup. Well, when I had this drawn out, so what I do is I draw Fibonacci from the swing low to the swing high because I'm looking for longs. We have this cross here, so now I'm looking for longs. And I was waiting for a 61.8. So I waited, and I was able to get into a little bit of a trade, right? I was able to take a long position at this 61.8. I had stops back here below these, and the trade went well. I had this target up here, and we ended up getting stopped out in profit. It was a cool trade. But on Monday, I got another cross. So then what I did was I drew my fib. Drew my fib from the swing high to the swing low. So when I'm looking for sells, I'm drawing my Fibonacci from a swing high to a swing low. When I'm looking for longs, I'm drawing my Fibonacci from a swing low to a swing high, because what I'm looking for is a retracement in price to secure an entry, and that's where we get these J1, the J2, and the J3 entries. So they're all based off Fibonacci, all of these entries. So if we look at this, we can see that we had our swing high, we had our swing low, so I drew my Fibonacci down. Then what I did was I said, hey, I want to get in where we have the most structure. So I forgot I could do this replay thing, so let's go to this candle right here. So when price came down, can I go one candle forward? Okay, I can. So price came down. We got a little doji candle, which told me price wanted to start coming back up, and it did. Price started to come back up on this next candle. Now, mind you, we are on the daily time frame, so this is an entire day of price movement, and this is an entire day of price movement. Price started to come back up. So what I did was I said, where do we have strong structure? So we had strong structure at the 50, which is a level 2 entry, or a J2 entry, I'm sorry. So we had a J2 here. We had decent structure here at a J3. And we had decent structure here at a J1. So when I was looking at this, I said, okay, if we have structure at a J3, a J2, and a J1, so at J3 is a 38.2% fib retracement, a J2 is a 50% fib retracement, and a J1 is a 61.8% retracement. So when I'm doing this and I say, okay, we have structure at all three, right? There's not just structure at J1, there's not just structure at J2, there's not just structure at J3. What I want to do is I want to go for my favorite setup, the best setup. And for me, that's a J1. A 61.8% Fibonacci retracement is my absolute favorite trade setup. So I waited for a J1. So price came up, and I waited. Oh, can I go back? I guess I got to do this replay again, actually. So price came up to that J1 right up here. If we drop it down to a smaller time frame, let's say a 4 hour, maybe even the 1 hour, it'd probably be easier to see. So price came up to this J1 entry. You can see on this 1 hour we had this wick. How did I know? Because I don't sit and watch these charts. That's such a waste of time to sit and watch and wait. What I did was I put a little ray here and I added an alert. Oh, I'm in replay mode, so I can't put an alert. But I put an alert on it. And what that alert does is it tells me, hey, your J1 entry is valid now. It sends an alert right to my phone. It also sends me an email, and it also sends me an alert on TradingView. So I get 3 alerts. It's hard to miss. So when I got that alert, what I did was I went over here. I grabbed my short position, and I started to draw my entry and my exit points. So if I scroll over to here a little bit, I have this already up, so we can bring this over. So my stop loss for a J1 is above or below previous structure. So for me, because I'm taking a sell, the stop loss is going to be above previous structure. So I have a nice wick up here with some structure back here and some structure over here. You can see if I draw this, you can see we have all this structure over here. So what I did was I drew my stop loss right around this zone up here. And my take profit is going to be the bottom of the Fibonacci retracement or the swing low. Once I had that, let me delete these so it's a little easier to see. So once I had the trade in play, that's it. I just enter the trade. I set my stop loss and I set my take profit. Now, what do I do once price starts moving? So if we drop it down to the hour chart, we got a little bit lucky with this one because this one took a move very fast. So right when we got this entry, price took off. It dropped straight down. We were up 1,000 pips pretty quickly. So what I do in order to make sure that I'm securing profits is I draw more rays. And so what my ray is it's 1R and 2R. So at 1R, which would be whatever my stop loss is. So if my stop loss, I'm going to hide these. It's a little more clean. So if my stop loss is 484 pips, well, 1R is going to be 484 pips in profit. So all you do to figure that out, SPX is a little bit different because it moves in points because it's part of the stock market, the S&P 500. So what I'm going to do is I'm going to subtract 48, not 484. I'm going to subtract 48 because in the stock market, 48 points is also equivalent to 480 pips in the foreign exchange market. So I'm going to subtract 48 for my entry. So if we have 4037 minus 48, we're going to get 3989. And that's going to be our 1R number. So what I'm going to do is I'm going to go over here. I'm going to drop this line. I'll click on settings and go to coordinates. And we'll type 3989 and hit OK. And that's 1R. So right here is 1R. So at 1R, we can come up here and look. So for 1R, stops to break even, 25% off the top. So let's say you drop a 0.1, right? A 0.1 trade, it's $1 a pip. So at 0.1, you're going to take 25% off the trade. So this will now go down to a 0.7 trade. So you're going to go in, MetaTrader, whatever you're using, and you're going to take 0.3 off the trade. Then we continue on. So I'm going to drop another horizontal line. I'm going to go back into my calculator, and we're going to subtract 48 again. That's going to give me 3941. That's going to give me my 2R. So I'm going to double click it, go to my coordinates, 3948, hit OK. Is that the number? Oh, 41. 3941, hit OK, and that's going to be our 2R. So at 2R, what do? 2R, we move our stop loss to 1R. So our stop loss will then move from break even down to 1R. So now we've guaranteed that we can't lose any money at 1R. We've secured profit, 25% of the profit that we're hoping to make, and we let the rest of the trade ride. Then at 2R, we're securing another 25%, and our stop loss is going to move down to 1R. So if price even comes back to 1R, then we're going to guarantee that when this trade closes, we close in profit. We don't close at zero, we close in profit. And we've also secured 50% of what we were planning on making. And then once we get to 2R, the rest of my trade rides. So we can see price came up. So we came down to 2R, price came up, it hit 1R. We got stopped out in profit. We secured 50% of the trade, and the other 50% got taken out at 1R, 480 pips. And then we also secured another 480 pips on top of that. And technically, it was actually 860 pips at this point. So it's a pretty simple trading setup, right? It's nothing crazy. This all happened in 2 days, right? It was just in these two candles. We came down in one day. We secured 50% at 2R, 860 pips. We moved our stop loss to 1R. We got taken out the next day at 1R. Let's take a look at gold, for example. So gold, what I did was, I'll turn the moving averages back on. So gold, I got a cross, right? So I started looking for longs. Once we got that cross, well, price was moving, and when price started moving, I waited for price to break this structure over here because I needed a confirmation that we were going to continue to go higher. So I waited for price to go up. I got this long wick here on this red candle. I can actually delete all this. So price came up. I knew that we had structure over here, so I waited for price to break it. Then what I said was, where's the most recent swing low, and where's the most recent swing high once we started to come back down. So I drew my fib from here to here. And I said, where's structure strong? Well, it's 61.8. We're kind of in a zone here, right? We're not really in structure. We're kind of in the middle of candles. Well, we have structure really strong at this 50. If I draw a line on the 50, you can see that price rejected at the 50, price came up, broke through the 50, and then we started to come back down. So what I said was, at this 50, because we have two rejections here, I think that the level or the J2 trade is going to be the best trade. So I said J2 is going to be my trade. So I set an alert. I went on here, hit settings, I added the alert. Actually, let me click on this. I actually got to shut this replay off. So I clicked on alert, and I hit create. Now I have my alerts. They automatically send the alerts right to my phone. So I don't have to worry about anything. It sends me an email, sends me an alert. I already went over this. So once price broke through, I got the alert on my phone that J2 was hit. So I took my long position. Now if we go back to SPX so you can see. So a J2 is a 50%. Our stop loss is going to be above or below the J1 entry. So if we go back to gold, My J1 entry is the 61.8%. Because we're in a long, stops are below. Target is going to be at the top of the fib. And we let the trade ride. We have 187 pip stop loss, so that means 1R for us is going to be 187 pips in profit. So with gold, it's hard because I picked two confusing pip counting things. I didn't pick the standard Forex pairs this week, unfortunately. But in order to figure out this, what you're going to do is you're going to take this 18 number. Kind of works the same as gold or as S&P. So I'm just going to add 18 to 48. So going to the calculator, see 18 plus 48. It's going to give me 66. So that tells me 1966 is 1R. So I'll drop a line, go into settings. Oh, that was pretty perfect. So 1966, we're at 1R. What do we do at 1R? At 1R, stops to break even, 25% off the top. So at 1R, what I do, stops went to break even, 25% off the top. Then I'm going to go back into my calculator. We need to figure out 2R. So we're going to, oh, it deleted. So we had 1946 plus 48, or plus 18, I'm sorry. So 46 plus 18, and then we're going to add another 18 to that. So we're going to get 84 because we had the other one at 6, so I added the 2. So we got 84. So I'm going to drop another line here. We're going to go into settings. We're going to type 1984, hit OK. That's 2R. So at 2R, what do? Come back over to here. 2R, stops move to 1R. So we guarantee that we'll close out in profit. And we're going to take another 25% off the trade. So if we go back to gold, once I hit 2R, my stop loss then moved up here to 1R. And another 25% came off the trade. So this trade's still floating. We're going to hold this trade through the weekend into Monday, and hopefully we'll be able to come out on top with a full target hit of 615 pips. Now, what I like to do is once the full target is hit, so if we come over to here, so you can see down here I have remainder of the trade rides, moving stops as new structure is created. So full TP hit equals another 25% off the top, then stops move to 2R. Oops. Stops will move to 2R, and the remainder of the trade will ride, and I'll move stops as new structure is created. So if we go back into gold, let's say something like this happens. So if our full TP is up here, where's that little draw? There it is. So let's say price comes up, we break out of the full TP. We still are in the trade 25%. As price continues to move up and create new structure, I will then continue to move my stop losses to the new structure and continue to let that 25% ride, right? The reason so many new traders fail is because they don't let the winners run, right? They're so eager to just create as much wealth as they possibly can, as fast as they possibly can, and they're just constantly getting out of moves and trying to get into new trades. They want to take so many trades, and they want to capitalize on every little move. Well, if you keep entering and exiting and entering and exiting and entering and exiting, you're going to start to lose and lose and lose and lose. It's like a vicious cycle. It's why only 1% of traders fail. And I think this one key thing, or I'm sorry, I said 1% of traders fail. Only 1% of traders actually ever make any money. And I think it's this one key thing is that 1% of traders, they let their winners ride. They let their winners win, right? They're not trying to get out of the market. If a trade is moving in their direction, they're going to let a portion of that trade just continue to ride on. Why not? Why not secure as much as you possibly can on that one trade? In the stock market, you have something called dollar cost averaging. And do this quite often, especially recently as the market's been moving to the downside. What you're trying to do is you're trying to get your average position as low as possible. So let's say a stock is at 1,000. I think they still got this on. Let's say a stock's at 1,000 and you buy at 1,000. Well, if you buy at 1,000 and it moves up to 1,001, you make $1. Cool. But if you were buying at 999 and it moved up to 1,001, you'd make $2, right? So why would I continue to buy up here, continue to buy up here, continue to buy up here when I bought down here and I could continue to let this ride and make this money all the way up to the top until price comes back down, stops me out, and reverses? So let the winners run. If they're gonna run, let them run. So that's why we let that remainder of that 25%. Oh, I still got this on. That's why at that full TP, we take off another 25%. We're out of the trade. 75% of the position is out, and we're going to let that runner run, and we're just going to continue to move stops as new structure is created. So all in all, it's not a crazy difficult strategy. We're going to let those MAs cross. It's going to tell us, hey, price is starting to move into a different direction. We're going to draw our Fibonacci from the swing high to the swing low if we're looking for a sell. And then we're going to draw it from the swing low to the swing high if we're looking for a buy. And we're going to wait for price to come back into those Fibonacci zones, the 38.2, which is the J3, the 50%, which is a J2, and a 61.8, which is a J1. We're going to wait for price to come down into the zones. We're going to see, does the J1 have the best price structure? Does the J2 have the best price structure? Does the J3 have the best price structure? If J1 has the best price structure, we're going to wait for price to come all the way back to J1 to get into the market. If J2 has the best price structure, we're going to wait for price to come to the J2 to get into the market. If J3 has the best structure, we're going to wait for price to come back to the J3 to get into the market. And then once we're in the market, it's easy. 1R, we have rules. At 1R, stops to break even, 25% off the top. At 2R, stops move to 1R, we take another 25% off the top. Once that full TP is hit, we take another 25% off, stops move to 2R, and we let the remainder of the trade move. That's it. There's no sitting there waiting for a new entry or another position, not until we're out of this trade. That's it. Now you can, however, if price continues to move down and you get a new swing high and a new swing low, you could draw a new Fibonacci, and you could find another J1, another J2, or another J3. Or you could just let that 25% ride on that trade. Once it closes out, then you can start to look for a new entry. That's generally how I do it. I wait for the trade to completely close, and then I'll come back to SPX, and I'll look for a new trade. So for me, we hit 2R on SPX. So at 2R, our stops moved to 1R. Took another 25% off the trade. We got stopped out at 1R. We took 50% off the trade. We got stopped out on the remainder of the 50% at 1R. So now what I'm going to start doing is I can say, hey, I got a clean chart now. I am waiting for price to come back in. I'm waiting for another setup. I'm waiting for another cross of these MAs. That's all I'm waiting for. So that's my trade style. That is what I do. I'm not looking for anything crazy. I'm not looking for all these different indicators and different moves. I mean, you can see I have the RSI on my chart. that's personally for me, for if I'm just watching things, I like to see where the RSI is sitting at. I'm not going to go into the RSI. That's a whole nother video. But for me personally, I just like to watch the RSI to kind of see where price is projected to move next. But yeah, if you guys have any questions, let me know. I'll drop the Discord link so you can get an opportunity to join our Discord. I'll actually pull this over here so you guys can see what our Discord looks like. So in our Discord, you can see we have a free section. So we drop free analysis. We drop fundamental news every single day. We have free resources, lots of books. You can get over 100 free books in here. A guide to build your trading plan, Forex 101 book, Commodities 101 book, all our socials in here. Yeah, and then once you become a premium member, we have a trading view indicator. We have crypto swing trades and Forex swing trades that will be sent to the Discord every single day. We have daily education. We call out Forex trades, commodities trades, indice trades, NFTs, cryptos, stocks. So yeah, so if you're looking to get in the Discord, I'll have a link down below where I go in depth about this way more every single day, Monday through Sunday. So let me know if you guys have any questions. Drop a comment below. Subscribe to the YouTube channel. It helps us out. And yeah, thanks for watching.